Uh, my name is Adeo Resi. I'm CEO of Decile Group, which is the parent company of VC Lab. It's also the parent company of Decile Capital. We'll talk a little bit more about that in a moment. And, I've been in, wow, it's been some crazy number of years. So I guess I started in technology in 1994. And so about half the time I've been working in the tech ecosystem, I've been working on building startups. And the other half, I've been working on things like the startup ecosystem. So I wrote the Safe Note. I wrote the FAST agreement. I started something called the Founder Institute. I started something called the Funded. I've launched a number of venture capital funds and a fund of funds. But that doesn't make me nearly as experienced as Marco. So Marco, if you want to just introduce yourself quickly, and then we'll jump into a presentation on Decile Capital.
Yes, of course. My name is Marco Herrera. I joined the Decile Capital for about 6 weeks ago as an investment professional. And I shall tell you a little bit more about myself, a little bit later. So that was my brief introduction.
Super brief, even better. All right, well then, you're going to plenty of time to introduce yourself because you're on the presentation. Let's start with the presentation. So my head's going to get really small. Sometimes people say my head can be really big. No. And let's get started. All right. So hopefully everybody can see my screen. So I'll take you through a little bit about Decile Capital and what it's working on, and then some exciting news items at the end. So Decile Capital is a new fund of funds by VC Lab, right? And we really are doing a lot of this because we believe that right now is a renaissance period in venture capital. You've got new local firms in large cities around the world. There's 300 and something roughly 340 large cities around the world. I think only a handful of them have an actual thriving venture capital ecosystem. So there's a lot of room for growth there. There are no new regional VC firms focused on places like Africa, Central Asia, etc., LATAM. And there has been, a lack of regional firms in many areas of the world. There are firms focused on industry verticals, whether it be obvious things like fintech to less obvious things like neurodiversity and neuroscience. And there's ethical VC firms getting started to really solve the challenges facing humanity today. And all sorts of different people from all sorts of backgrounds are starting firms. And we're seeing this because we're taking in between 2,000 and 3,000 applicants per cohort of the VC Lab Accelerator, and we're running that 4 times a year. So last year we had 9,000, I believe, people. Distinct people start applications, and they're exited entrepreneurs. They're successful angel investors. They're famous individuals, top executives, ecosystem leaders, and former VCs. And everyone's coming to roughly the same conclusion, which is, wow, I can have a major impact in the world by deploying capital. Because if I'm interested in, let's say, neuroscience or neurodiversity or whatever, there's a lot of great companies all around the world working on these problems that need guidance and capital. And that's what venture capital does. So it allows you to force multiply your interest to back a lot of companies and help many different companies at the same time succeed. So you can achieve a bigger vision in the world, which is part of the reason why the model's expanding like it is. But unfortunately, it's not the easiest thing to do. Industry is inaccessible, unclear career paths, secret information, expensive training. I mean, Kaufman is in the $100,000 a year if you want to be a Kaufman fellow, because there's the program fees and then you have to travel and everything else. So it's really reserved for people already working at funds, and it's one of the best training programs out there, right? Expensive and somewhat elitist, right? It's the whole industry is broken. They don't use tools. If you took a venture capital firm from 1994 and you teleported it into 2023, The systems, the back office, all the tools would be the same. They would use email, they would use spreadsheets. I mean, it's kind of crazy, right? And the whole industry is complicated, but we're looking to fix that. So we at the Decile Group, we provide free training with VC Lab. We launched a Venture Institute now to train associates for free. Everything's free, 100% free. We created an integrated tool set, also free. So you can run your whole firm, the CRM, the accounting, everything on one tool. And then we support your creation and launch of the firms with Decile Partners, which is a top back office information group. Okay. And so we've created the end-to-end operating system for modern day venture capital, with it primarily being free, right? And again, VC Lab, the accelerator, is the market leader right now. We, just to give you a sense, we accelerated about 175 firms last year. And the best rating agency for this type of data is PitchBook, though it's problematic in other areas, but its methodology here is pretty good. It asks the different domiciles around the world how many new firms and funds were started, and they collect all that data. And they just under 400 firms were started in 2022, and we accelerated 175. So that's a big share of the market. And then Decile Hub is the market leader as well. We have roughly 500 firms using it every month to run their pipelines, their back office, a big chunk of their firm, and in some cases all of their firm. To give a sense of scale, that's larger than anyone else in the market as well, and probably larger than the top two next players combined. And as we're continuing to grow, eventually this is a power law entity, so we'll have more firms using it than the whole market combined, and we're pretty close already. Then on the Decile Partners, the back office, that is a 94 net promoter score. So when was the last time you worked with a service provider, if you will, who you could give like a 10 out of 10 to refer to people? Well, everyone gave us a 10 out of 10 except one person who gave us, I believe, an 8 out of 10, and that's why we got a 94 NPS. And I was like, thank God we got the 8 out of 10, because if they had all given us a 10 out of 10, there's nowhere to go but down. And in fact, even at 94, that's pretty amazing. All right. And then last but not least, we have Decile Capital, which is just getting going, and we have no J curve. And I'll talk about that in a moment. And so Decile Capital is a family of funds to back promising new managers from VC Lab all around the world. And I mean, Marco, maybe you can, I'm only aware of a few fund of funds, like when I say a few, like a handful that really do new managers. I'm not sure if you know of any more, but it's a pretty rare thing.
It is. There are a couple of funds like that in the world at the moment, so it's a pretty rare thing to find those.
And so, if you're a new manager, you're kind of, excuse my French, shit out of luck, because you're going to have to go to like angels and small. So there are not too many funds that really back new managers. And we're trying to change it. So we're one of them. And I'm going to talk a little bit about some of the things we're doing in the news to change it. We're educating other limited partners on how to invest in new managers. Right. And so I'll give you some details in a moment. So what do we mean by a family of funds or family of fund of funds? Well, we're going to launch a lot of funds, and they're different areas, right? They could be performance based, like top 5%, top 10%, or famous people. They could be geography based, Africa, LATAM, etc. They could be industry based, and they obviously could be based on demographics, such as a diverse fund or a woman based fund. So it's a woman manager, I should say. But the idea is that over the next few years, there's these many different funds that Decile Capital will be operating, and it's very likely that a single manager will get investment from multiple Decile Capital funds, because let's say you're a woman manager in Africa working on AI, and you might even be one of the top 10% of the program, so you could get investment from multiple different funds because of that, as an example. Our first fund of funds, Premier One, closed, we're deploying, and it backs the top 5% of managers coming out of VC Lab. And as I mentioned before, because of the performance of our portfolio funds, we do not have a J curve. And a J curve is very common in venture capital. And so what happens is you start making investments, but those investments don't have any activity, because it could take 6 months or a year or 18 months or even 2 years before someone raises a new round and gets what's called a markup. So you have fees that happen and they bring your returns down, but then you start getting markups that bring your returns up and it looks like a J. But we don't have a J curve, right? Because our portfolio funds have markups early that are preventing that kind of downward fee situation from happening. So that's pretty interesting and pretty unusual. It's early indications of success are definitely not success, but it's definitely an early indication of success. And so how, if you're interested in Decile Capital funding, you know, there's a number of steps. So you go through VC Lab. It's going to help you. It's the best accelerator in the world today. It's got many benefits that is for another time. We encourage you to use Decile Hub, right, which is the platform. Again, it's the market leader, so it's not like that big of an ask. In fact, we have people sign up for VC Lab specifically just to get Decile Hub, because it's only available if you go through VC Lab. You work with Decile Partners, which is at this point, I would say with the 94 MPS, probably the top back office provider. And it's a pretty incredible set of things that we offer there, including playbooks for every situation that you face. And then boom, you get eligible for Decile Capital. And we take a look at you. We look at everyone we work with, right? And that's the goal. And with respect to Premier One, it's really focused on the top 5%. So how that works, and you know, there'll be other funds that we're launching, hopefully as soon as this year. And so you go through the accelerator. They're usually between 50 and 75 firms that finish the program. Then they work, a subset of those work with Decile Partners. We usually do more than half actually these days, so these numbers are a bit old. And then we'll back the top 5%, right? At least for Premier One. Different funds will have different theses. And how this manifests in a real world scenario is we're actually backing a LATAM fund. And interestingly enough, they have a unicorn in their portfolio. Which is incredible for an early stage fund a few months after launch. You know, to have a unicorn is a unicorn fund, right? So to have a unicorn in the fund makes the fund itself a unicorn, especially this early on. So they joined VC Lab in March of 21. They engaged in Decile Partners very quickly because they were ready to form in July of 21. Believe it or not, we didn't really have Decile Hub in a good spot at that point. So by October, we had it kind of V1 and or you know, enough to help with the close. So they closed on Decile Hub in October of 21. And by February of 2022, a few months later, we invested in them. And around that time, they also got a unicorn in their portfolio. So, you know, that's a timeline of a real case scenario. Just because this fund is still fundraising, we're not going to provide details on who it is and their thesis, etc. And just as an FYI to remind everyone, you know, don't share your thesis publicly if you're presenting or anything like that while you are fundraising, because that does present some general solicitation issues. It doesn't prevent them, it presents them. So you don't want to be generally soliciting for your fund. And we're doing these type of things all around the world, right? We're looking at now investing in managers in Africa. As I mentioned, we invested in a manager, and we actually invested in 2 managers in Latam. We invested in a manager that's focused on India. So we're really looking with VC Lab all around the world, but we're also looking with Decile Capital all around the world. As long as you're a top 5% firm and fund, it really doesn't matter what your geographic focus is. We're open to backing you, right? And that's also very unusual. And all of this is done with the Mensarius Oath because we believe in ethical investing. So much so, our mission is to transform venture capital into a force for good in the world. And that's why we do what we do, because we believe that if there's a large number of right-minded and ethical investors looking to make the world a better place, there's no better way to force multiply their efforts than venture capital. Because as I said at the opening, a single manager with a passion and an interest can back, let's say, 20 firms or 20 startups in a fund, possibly more, possibly less, but that's about the average, and also provide guidance and support to help them succeed. So it truly is a great way to force multiply. And what a better way to help change the world for the better than to empower hundreds, if not thousands, of these type of managers to make an impact, right? And I have some exciting news, okay, about Decile Capital. So we'll go through 4 news items, and then if you have questions, I see we got about 12 questions in the Q&A. Get those questions in the Q&A, and we'll get to them at the end. So the first piece of news, I am very, very excited to formally introduce Marco on the team here. He can give the longer introduction now. But before he does, I just want to just tell a short story about Marco. So I saw Marco on stage now a couple months ago, a little over 2 months ago. And I was just blown away. I was like, this guy knows more about what I'm trying to do than, I do by a large margin than most people do. And so I kind of stalked him at this conference. I'm like, hey, Marco, and finally found him, and we sat down and talked, and it turns out he shares many of the same visions, many of the same passions, and I'm so honored and proud to be working with you. Marco, take over, introduce yourself, and I'll be quiet for a bit.
Yes, quite new to the Decile Capital, 6 or 7 weeks now, but I'm quite old to the industry. I started with investments 1986, which is about 37 years ago. It's a long time. I spent my first years with listed equities, options and futures, structures, derivatives, and so on. Then I went to co-found a couple of companies, spent 5 or 6, 7 years with those in the 90s, got some exits, and also late 90s started with the family office and also with venture capital investments. I started with pre-seed and seed investments, venture capital. Mostly it was mobile tech because I'm from Finland. And I did that 1 year before the dot-com bubble, but survived that with pretty good results. Then around 2006 or 7, I was asked to join the public pension plan as a head of private equity, which I did. And I spent some 15 years in that company. I was involved with different kinds of investments, from small funds, like, pre-seed funds, first-time managers, to these, big buyout funds, secondaries, portfolio secondaries, direct investments, co-investments, private credit, private debt. And I think I was, about 250 plus fund investments I was involved with, directly and indirectly, and maybe something like 60 direct investments and about 50 co-investments during all these years. But I have to say that it took me 37 years to make my first investment in a solo GP, which I had the honor to make that as a part of the due diligence team here at the Decile Capital. So that was my first solo, which is quite exciting, really. And I have to say that when I met Adeo in Helsinki for about a couple of months ago, I was blown away myself because I couldn't understand that somebody's doing this, But as Adeo explained to me, I said, wow, this is incredible, because I had thought about these kind of things for about 15 years. And it was impossible in the past, but now we have its technology and everything. So I'm really thrilled and excited to be able to join the team. And this is my homecoming, because I started with venture capital. That was my, my first take on the private investments for about 25 years ago. So now I'm back.
It's really awesome to be working with you. I can't stress it enough. And thanks for the kind words. It's yeah, anyway, I'm all like choked up, because first of all, let me just say, if you are an entrepreneur, what we're doing is incredibly stupid. We're doing like, an accelerator, this and that, the other thing. Okay. Don't do that. We're about 2 years old officially right now, and we worked on it for about a year beforehand at the Founder Institute, so it might even be 3 years. And a lot of what we've built is because the market told us we needed it, right? So we started with the accelerator, and the market said, hey, we need tools, and we made the tools. And now they're the market leader. Everyone also said, oh, these formation and back office providers are terrible. You need that. We need help. We built that too. And then last but not least, they're like, God, finding capital is really hard. And we did that as well. But don't start out doing that. It's a lot of work, and we're very lucky that it's come out so fortunately well for us. The second piece of news on Decile Capital, thank you, Marco, is we closed which Marco was talking about, our 7th fund-to-fund investment. And we're on pace now to back 1 or 2 new deals per month, thanks to Marco. So before, we had a team do it, but it was like multiple people, various, like, what's going on with this deal? Okay, we're almost done with diligence. Now Marco's leading the whole charge and in charge of, ensuring that so-and-so does such and such. We got the right references, everything's done. That's allowed us just to pick up the pace dramatically and do a better job, which leads me to my third news item, which we've launched a greatly improved due diligence program. And let me tell you a little bit about it, because I think it's so cool. So new managers don't really raise from too many people that do a lot of diligence, right? They some, but not a ton, right? However, the first time you get hit with someone that has a due diligence process, you're like, oh my God, I think I'm prepared. But the second they hit you with all the questions, well, let me check your data room, what are your references? They're like, oh, I don't have that. I don't have that. So they end up having to scramble when they get a big LP to prepare all of the materials, and it can sometimes not be a very professional process. So what we're doing is, at Decile Capital, we're taking you through what could best be described as, it's a professional due diligence process, but really tailored for beginners. And we're even helping the managers and giving them lots of extra time. We're not rushing them to get everything ready. And then what that means is that when we're done with our due diligence, right? So that we can make an investment decision. They're ready for almost everyone else, right? Now, a lot of bigger fund of funds and investors into venture capital have their own weird processes and their own weird diligence items. But because you've gone through our due diligence process, you might have 70, 80, or even 90%, and in some cases, probably 100% of what some larger LPs will want, you'll already have done. Okay. And on top of that, as I said earlier, not a lot of new managers, not a lot of investors understand new managers. Okay. And so what we're doing, are you ready? We're training them. So we'll say, look, and because we have Marco, who's so experienced, right? He's worked in the industry, as long as anyone, and he's worked on it on all angles as a VC, as an entrepreneur, and as an LP, and as quite a large LP at that. And so we're going into some of these LPs that are dealing with our portfolio funds, and we'll say, hey, we'll be happy to sit down and talk with them as a reference. And we'll talk to them about how to invest in new managers, because they don't know. They take a process designed for managers that have been running funds for, in some cases, years or even decades, and they give it to a new manager who started their fund 6 months ago, right? And it just doesn't work. It's like square peg, round hole. So we'll get on the phone with those LPs and actually help them to understand how to invest in new managers. So that's totally cool. And the last piece of news is that we're testing right now an LP matching program. And that's working really well. We're very excited about it. In fact, we'll even build it into Decile Hub if it continues to test so. But if you are a Decile Capital portfolio fund, we're saying, hey, give us 10 LPs that you want more of. We put it through our a matching system. It's not powered by AI yet. It's powered by a guy, Sam, but Sam's very experienced. But we are eventually going to make it powered by AI. And then we send you back, more LPs, as many as we can, matching those criteria, because we've built up about just over 1,000 LP database, and we're growing it every day with all these criteria, where they work, what they're interested in, blah, 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 blah. And then we're taking the profiles that you give us and matching that database, so we give you more of them. So we're really excited about that program as well. And that's it on the news, everybody. So if you're interested in being part of VC Lab or getting investment from Decile Capital, go to govclab.com. We've got right now, cohort 12 is starting on August 30th. So if you want, you can still apply. The deadline's passed. We're at 250 accepted-ish. I don't look at the numbers this morning, but I think it's like that range. Based on yesterday's numbers. So that means we've got about 60-ish, 50, 60 more that we can accept. And we have lots of applicants, but there's still a chance for you to get in. So go to govclab.com, read about it. And if you get into the August program that starts August 30th, you will be able to be vintage year 2023. And this is looking to be one of the better vintage years. I'd love to hear your views on that, Marco, but we'll talk about in the Q&A. And that's where we are, the Q&A. So I will stop the screen sharing. We're at exactly that's pretty good. 32, pretty close to even. Do you want to come on screen, Niels, and ask questions? And
hello, it's me.
Hi, Niels.
Hi, Leo. Yeah, sure thing. First question comes from Nick. What's the average allocation in dollar terms of Decile Capital to new funds?
We do one slug of 250,000, and usually on the second close, and then we'd consider doing potentially a second 250 slug but we haven't done a second 250 slug yet in any firm.
Another question from Igor. What's the average or min or max ticket for the fund of funds?
Well, it would be 250 or 500. Now, what we're finding, everybody, is that, and it's the reality of the market, most new manager funds are somewhere between, let's say, 5 and 15 million. Okay. And that makes sense because once you start, now we've had new manager funds say, I'm going for 10 and close at 20. So oversubscribing happens, right? But again, so we're seeing most new manager funds are coming in between 5 and 15. And so, you know, the 250, 500 keeps us as a small limited partner for now. And that's our intention. If you want to add anything to that, Marco, otherwise.
Say that it's normally a good idea also for the GPs not to have investors who have more than 10%. Somebody even some people even say that it should be between 5 to 7%, ideally, the big ones. So we want to, you know, be disciplined even there.
Let's keep going, Niels.
What are the KPIs used to differentiate the top 5%?
Yeah, so that's a good question. There's a few different things that delineate the top 5%. So first and foremost is speed. So we see that some funds have just this are orders of magnitude faster than their peers at closing on capital, closing the fund, or maybe securing commitments, closing the fund, even doing deals. They're just orders of magnitude faster. So to give an idea, the medium number of months to close once you start a closing process is about 3. And then there's many that do it in 1. Okay. And so that if you're in the 1, you already, that's pretty fast. Something's going on there. Another thing that we see, and I'll go with the things I see, and Marco, if you want to add anything, is that they also manage to do very high quality deals. And a lot of times they're warehousing deals that already have markups. And so we can look at their deals, we can look at their warehouse deals, and they have markups, and it's like, well, okay, well, you're investing in companies that are doing well because they're already marked up, and we can see the time to mark up all this stuff, and it's okay, that's pretty impressive. You're managing to get really good deals done. They're managing to get markups very quickly, so that's another indicator. And then we have all this data, right? So we've worked with you in the accelerator. We help you in Decile Partners. We are helping you manage Decile Hub. And so all that, and we rate everything. So that data and the accompanying rating by the different team members are also a major contributor to figuring out if they're in the top 5%. Marco, do you want to add anything? And then Marco does a lot of diligence.
Yes, there is one thing which I think that we excel, and that is our reference checks. We do a lot of reference checks. We make the calls with the founders or former colleagues, and maybe some LPs and GPs, you know, people like that. And that is something we do because sometimes the first-time managers, they might not have a track record. It's a positive if they do have, but we make these reference checks, and you know, it's pretty much the same type of due diligence as Adeyo mentioned, but it's adapted. We understand that we are talking about, you know, first-time managers maybe, and some solo GPs, but reference checks are very important.
Okay, Kenneth is asking, what's the median amount raised by accelerate firms that went through the program and the cohorts? So I actually happen to have that data right here in front of me. So the average is 3.9 million. The median is 1.6 million, and the largest is 33.7 million for the first close. Now that's the first close after they finish the accelerator. The fund sizes are different. And if I'm looking at the time to first close, we're 5.7 month average, but in the first 3 cohorts, the average was 12.4 months. So just to give you a sense of scale, the market average is around 18 months. Our first 3 cohorts brought that time to close down to about 12.4 months. And then now we're down to 5.7 months. So we've been really making some great progress there. Let's go to the next question.
Sunmeet is asking, how big is the Decile Capital fund of funds?
We were oversubscribed our 5 million target amount, so we're over 5 under 10. And so it's a small fund of funds, but again, we're making, as I said, $250,000 to $500,000 investments across 20 firms. So it's right sized for the need of the firm.
How does Decile Partners match up with other fund admins such as AngelList or Carta?
Yeah, I can talk with that. Like, guys, don't work with Carta. Their engagement letter has a $75,000 cancellation clause. So you could do absolutely nothing with them and you will owe them $75,000. I don't find that very ethical. And they have a lot of people on salary that are just like pounding the pavement, trying to get people to sign these engagement letters when they're not ready. I literally had someone sign a Carta engagement letter and ask me, what is a close? So just be careful there. So look, Carta is, I wouldn't work with them. AngelList is okay. AngelList is AngelList is different because for most firms, AngelList owns the management company, AngelList owns the general partner, AngelList owns the fund, and AngelList owns the bank account, controls everything. So you sign a consulting agreement with AngelList to become the lead, like a term so you're not really a manager. You're so it's a prosumer product, right? So or amateur product that's very good for people looking to get started. Now they have a bring your own fund offering as well at AngelList, but it's very expensive, right? It's super expensive. It's more than twice as expensive as our offering. So what we do at Decile Partners is, I wouldn't work with Carta. AngelList is pretty solid, but it's really focused on the amateur market. And what we do at Decile Partners is we're focused on the professional market, right? So people who are doing this full time, and we provide the full offering of everything that you need for a flat rate, which is no one else does. Okay. So we do the formation of the funds, and then we do all the accounting. We do all of the back office support, and we even provide strategic advisory. So as I mentioned, it's got a 94 MPS right now. And so what we do is you have meetings every couple weeks or months, depending on your need, with a person that's assigned to your account. That's also unheard of in the industry, unless you're paying lots and lots of money. And that person knows what's going on in your firm. And if you need something, we have like all these playbooks, dozens and dozens of playbooks. And the playbook could be for like finding LPs, bringing on a partner, bringing on a venture partner, whatever it is. We have a playbook, and then we work with you on those playbooks. We have a whole team of professionals there to help. Whatever you need, we help you get done. So it's a pretty awesome offering. Let's keep rolling. I took a little long on that one. I'll go faster.
Back to Decile Capital, could you elaborate on the key factors driving Decile Capital's success?
I'm happy to share this one with you, Marco. I think obviously just backing the top 5% of funds that come out of VC Lab. For each fund will have a different criteria for success. And as long as we execute on that and those firms do well, I think we'll be successful. But if you want to add something, Marco, love to hear.
Say that this Decile Capital Premier One and the other funds which we are going to have is probably going to be your first institutional investor in your fund. Your first institutional investor. For us, it means that we know your company obviously pretty well before we make that investment, which means that we are confident that these funds that we are investing in are going to be top performers. And also, I'm quite sure that it might, and it's going to make easier to raise funds from other investors after we have made the commitment. It has already happened. So there are these kind of, I would say, positive signals that the market is going to get from us. And also, we are early adapters. There are not too many people who are trying to do this at this stage. And I'm totally convinced that our funds are going to perform extremely well.
Yeah, exactly. I'm very confident as well. There's a question here from Srikanth. Can you give us the metrics? Yeah, I mean, we're totally transparent about metrics, guys. I don't have to you don't even have to ask. You can just go to our website. So if you go to, and I'll share the website here. Boom, here's the website. Scroll down a little bit and it gives you this funky chart here. This funky chart is actually accurate. So we're 360 firms as of July. So as it was accurate as of maybe a few days ago. But the reality is we're about, it's always growing. So we try to update it every few weeks or months as needed with updates. So 360 firms accelerated just over 4 billion in AUM. There's been 150 up rounds in the investments that the portfolio companies made. Interestingly enough, some of the stats, these are the aggregate stats, but if you look at cohort 10, 40% of the firms that graduated had one female GP. So all of our stats are public. If you want more stats, follow me on LinkedIn. I publish all our stats, any data that I get from the team. And there's some data I haven't put into a nice format yet, but if I get data, I publish it. So I'm sitting in front of me on another screen here, literally all of our data. And I would share it with you, but it has some people names and fund names on it that I probably shouldn't share. So, but if you have any specific questions, I will do my best to answer them. But again, if you just follow me on LinkedIn, maybe you could put the link in the chat, Niels. I publish our data like every day. I have nothing to hide. And we want to be open because that's another problem. Like there's no good data on the industry right now. So we'll publish our data ad nauseum to contribute to the industry having more accurate data about everything.
Your LinkedIn is in the chat. Another question about our accelerator program. What's the biggest reason why firms aren't graduating from the program?
Look, you have to close a fund to graduate. So if you don't close, you're not a graduate. So our graduate numbers go down, actually, because what happens is 3 months after the program, someone hasn't closed yet, and they write in and say, hey, I'm not going to close. And we email everybody as well. So we write them, they write us. If you're not closing, then, you're not an alumni. You have to be an alumni, you need to close on capital. So it's hard, right? Candidly, it's hard to close on capital. So people get like halfway through the program and they say, I can't do it right now for one reason or another. Or they get all the way through the program, and a few months after the program, they said, look, I don't have the time. I can't do it. I haven't had success, whatever. And they don't, and the numbers go down. So yeah, we actually started 2022 with over 200 alumni, which would have made us more than half the market. But because some people didn't close or wrote in and said, hey, I'm not going to close, we're at 175. So, and that's fine, right? Because it doesn't, at the end of the day, we're here to help you close and change the world for the better. And if that's not something you want to do, well, that's okay. No worries.
I have a question for Marco from a fellow Nordic person. What are currently the biggest challenges working with great people and colleagues to represent US culture?
Marco, what did you say? You didn't hear the question?
I didn't hear.
Okay.
As a fellow Nordic person, what are currently the biggest challenges working with the US culture?
No challenges. I love it.
We're pretty unusual though. So we're like closet Finnish, if you will, in the US, because the Finns are very matter of fact and kind of no BS. And I think our culture is very matter of fact and no BS. So I think it really depends on, what Nordic culture you're from and what is the culture of the company that you're working with. And we're definitely a cultural match. I think.
Yeah, and it's always people to people business, It really doesn't matter where you come from. It's about the personalities and the people, if you know what I mean. That is the critical situation, not which country do you come from.
Yeah, so this was an interesting one. It's a long question, but I'll paraphrase it, Niels.
Yeah.
So, given the fact that venture capital cycles are long, often a decade, how does someone adapt and adjust their strategy within that time frame, et cetera, right? And so let me that's a good question, but it's kind of a little not tethered to the tactical realities of the industry. So I'm going to explain the tactical realities of the industry to answer the question. Okay. So you have what's called an active investment period, and that's normally much less than 10 years. It's often 2 years, 3 years, or 4 years, one of those settings, if you will. And then once that period's over, it's done, right? There's no more investing into new deals. So in fact, it's not really 10 years. And then the second thing is that you have a thesis, and your thesis isn't law. So if it says you're going to invest in electric vehicle companies, you can make some non-electric vehicle company investments, right? It's not like, but let's say 70, 80, or 90% of your investments need to be electric vehicle companies. So and LPs like your thesis, and they want you to do your thesis. In theory, you like your thesis, you want to do your thesis. So, again, it's like you're saying, like, look, I really do want to invest in electric vehicle companies. I'm going to make those investments, let's say, over 3 or 4 years. And then it's like, you put your chips on the table, if you will, using a roulette analogy, and you see where the ball lands, and hopefully you hit a win, right? If you want to add anything, Marco, to that. Okay. Let's move on. How much is the fee for Decile Partners? So Decile, you have to be in VC Lab to work with Decile Partners. And Decile Partners has three components, right? So your formation, which is setting up all the entities, is a flat $50K. That includes all closings, all entities. The trick law firms use is they charge you per closing, and they don't set up all the entities. So they're like, oh, we can set you up for 30,000. Oh, that's great. Well, they set up like 2 entities for 30,000 and maybe do 1 closing, but it usually takes you lots of closings. So it's all inclusive 50K. Then it's 25K flat per year for all the accounting, all the support, and we take a 5% stake in the GP as a venture partner. So we're like a venture partner. So 5% stake in the GP means that if you have 20% carry, that's 1%, right? That's the venture math is kind of confusing that way. I want to fix it, but it's like lower on the priority list. Making venture math understandable by human beings, like it's like, anyway, and that whole other topic. So those are the costs. Let's keep rolling, right?
Is the LP matching program only for US based LPs?
No. It's for everything we do is worldwide, global.
Question about Decile launch. Are we doing a new cohort soon?
Yeah, I think cohort 12 of Decile launch, it's called Decile launch 12 because we use cohort for VC Lab. That should start, I believe, the last week in August and get people formed by October and formed and closed by October.
What's the average management fee for the fund of funds?
Premier One has 0. We're charging no fees.
We
Now,
have some.
obviously, we're going to do management fees in future funds, but we didn't have Marco on the team when we started Premier One, so we didn't need a management fee.
People who applied for cohort 12 are asking about their application status.
We haven't finished processing everyone in cohort 12. I can look you up, but this really isn't the webinar for it. But basically, cohort 12's admissions are underway. You may have an email in your promotions tab or spam folder. So if you have applied to cohort 12, we're not done with admissions, but we're like 90% done. So if you haven't heard from us, check your spam folder, check your promotions tab just to be safe. And then if it's not there, we're still working on it because, as I mentioned at the onset, there's still time to apply. We're still churning through applications. We got about 50 slots left in the program.
What would be the key differentiator for Decile Hub, I think?
What would be the key differentiator for using Decile Base? But yeah, I think he meant Decile Hub. What can we highlight? So. Yeah. I mean, Decile Hub is really a pretty cool product. I mean, I'm happy to briefly show it to you. What do you think, Neil? Is it worth it? Is it what would take us off base here?
That would basically be the end of it. I think we have 4 minutes and we do need.
All right, let's go through some other questions. So it's the market leading back office platform to run your firm on. So, if you want to learn more, you can go to decilehub.com and read some, or go to decilegroup.com and click on Decile Hub and you'll get even more information there. Maybe you can put those links in a second. All right, let's roll.
Is there any deal flow syndication between Decile Labs or VC Lab for co-investments?
Yes. So I'm guessing you're just saying, like, if a manager in the program has a deal, are they able to syndicate it to other managers? Yes. So we have a deal flow channel in Slack, and there are lots of deals in it every day. And if there's a button and you click the button and it pops that deal right into your Decile Hub instance with all the information pre-populated. So if you like a deal from a fellow GP, and a bunch of our GPs have formed like mini syndicates already where they're, and you discovered this in diligence, right? That like some of our GPs are already syndicating, right, Marco?
Yes, absolutely.
Okay. Do you provide tax advisory as well? No, that's the one thing we do not do. So we don't touch your taxes. Okay. We have a partnership with a couple, but one primary and some alternate tax firms. They do the taxes for, I believe it's like $1,200 or $1,300 a year for the different entities, which is like way inexpensive. And as part of that, they'll give you some tax advice as well. So it's not, and we have a tax person on staff that interfaces with the vendor and advocates for your interest, but that is not that's one area we don't do, because again, your personal taxes are complicated. They often involve other things besides venture. And so you have your own vendor that we coordinate with on that. I see we got 2 minutes left. So do you want to pick a question or two, Niels, and then I'll leave some closing remarks.
So Omar is asking, is there any strategic advantage to raising relatively lower AUM under 10 million and then raising a second fund after almost all of the capital has been deployed?
Yeah, that's how you do it. You raise a small fund and then you try and oversubscribe, and then so that's exactly how you do it. Literally, that's the strategy. Raise a small fund one, and then go and quickly and then I think we have the fund size in the let me just see if I can find it. We have an article on fund size that is it's called well, I don't want to look for it, and
I think I got it. I'll quickly drop it.
Okay, thank you. Perfect.
So
Okay.
last question, Trevor asks, are there any industry restrictions for Decile Fund of Funds?
The Decile Capital, Marco, and industry restrictions?
We try to avoid certain industries or the ESG, since the answer.
Your mic is a little cut out there. No, there are no industry restrictions. So well, first of all, thank you, Marco. Thank you, Niels. Thank you, everybody. We're really excited to share this vision with you, right? We're here to make the world a better place by empowering managers that are ethical, that share our values, and want to see humanity thrive in a positive way on this planet. And if you're one of those managers, we have processes and all this stuff. I outlined it all a little bit here today, but at the end of the day, we're just here to help. And we want to help you be the best version of yourself, to create a fund that can make the world a better place, and to really drive positive change in the world today. We need it, right? We need to see positive change. We need points on the board, right? We have so many losses right now. We need to see wins. And every time that we fund a manager that cares about the world or wants to do something better in the world, to me, that's a win. And every time that manager backs a company that's trying to do something meaningful in the world, that's a bigger win, right? And so one of the things we'll be working on over the next few months is, to some extent, it's great that our funds are doing great. It's great that the network's doing great. It's all our numbers are up and to the right. But I also care that the companies that are receiving all the capital, that receiving the help, that they're working on things that matter and they're succeeding. And we're going to track it all the way down, right? We're going to measure our impact all the way down to the employee sitting at a chair in Chile, to the person that's getting fed because of a company in Africa, everything. Because it's not just good enough that we're empowering great managers to make a difference. We got to track it all the way down to the person receiving the benefit, or the benefit to humanity. So with that said, thank you so much, everybody. This was really lovely. Thank you, Marco. Thank you, Niels. I'm excited to be hopefully working with you.
Everyone.
Bye, everyone.